everyone. Hope you can hear me okay. Just keep in mind a couple of things is when we do our trading on Chart Patterns Mastery and the way I've done it for 45 years and how I taught 100% of traders making money with that day trading firm I was in the earlier in my career for 9 years. It's about drawdowns. So I see a lot of people on Twitter brag about how much when they make money. But the problem is that's what they do. They have gigantic drawdowns. In fact, most I see do this and have drawdowns here. So our key is to do this. Be in a bull market. Small drawdowns, good wins. Small drawdowns, good wins. So just keep that in mind. If you go and buy you go and buy like an option at $6, it goes to zero. Well, that's a big drawdown. So just keep that in mind. So what are we doing now? Well, this is all about showing about rectangles. So that's all we're doing in here, showing about consolidation patterns or reversals. And I'll tell you right now, if you go in like American Express and say, oh, it's in a support zone or it's this or that, that's all fine. But just keep in mind, I like to combine it with a reversal pattern. So the first thing I want you to realize is this: 200 moving average, take that off. I don't understand this rationale here. I'll show you what we're talking about. I'm going to detach this gadget. I just want to show you this because it's driving me up the wall. Remember, everybody that puts the news on Twitter and all this stuff, just keep in mind I've been doing it longer than them. So just keep that in mind and making money, people money. But I want you to see this because I'm just fascinated. I want you to see this right here. And I'm going to take in Trade Flash. Trade Flash. And I just want to show you what I'm talking about. And this is a myth. It doesn't, just don't believe this stuff. Let me show you what we're talking about. Here you go. And they're talking about Apple. Apple is at its 200 moving average. Forget about 200 moving average. I just got to get that out of your head. How's the 200 worked here? I know more people that told me that they can't trade for a while because they listened to other people about the 200 moving average. How about the NASDAQ 200? How about the Russell 200? How about the transports 200? Where the heck do they get that the 200 is support? It's the price support that matters on the way down. Fibonacci's, forget it on the way down. Price, care about price. You can go and look at Big Bad Voodoo Daddy / David Starr and his voodoo lines, and so much of it is based on price. It's great. So I know there are a lot of other things in there, but just keep that in mind. So that's number one. Number two in here, on the way down, if you're going to buy, you don't want to try to buy the bottom. You want, now, there are a couple of things. If you want to buy support zones when it's over that red line, so as determined by, that to me is determined as an uptrend. So just keep that in mind. That's what I determine is an uptrend. So keep in mind that if you buy on the way down in an uptrend, still you want to look for that reversal pattern, even in an uptrend. You don't want to buy on the way down. You don't know when it's going to stop. So I'll show you a rectangle right here. So a lot of what we see, and we saw it Friday, and I called it out from my room. So what are we talking about? We're talking about this. We're talking about first things first. Does anybody see anything here that looks bullish? I was just in the central room showing them that. Does anything on a short-term chart on the left look bullish other than hope? Does anything? I don't know about you, but that sure looks like a bear flag to me. There you go. And Jack, I think that was you on StockTwits that put that real nice thing about me. So thank you. So if you're wondering what we're talking about, we've had a friendly competition, Jack and I, on paper trading for the competition with the Leap paper trading. Check this out. He beat me. I'm pissed off. 756 out of 57,000 people. And I only traded it 10% of the time. So thanks for putting that in there, even though you beat me. So next time I'll trade it bigger and I'll trade it more often. I cannot let you win. No, just kidding. Just kidding, Jack. But I was thrilled for you. So thanks so much for saying nice things. But getting back to it, I want to show you this. Right here. What looks bullish? That's all I want to know. What looks bullish? Nothing. On the other hand, go look at the SPY on Friday. Now, I'm not trying to tell you never to buy or that it's this or that, but this is a rectangle. Sort of reminds me, we were watching the best commercials from the 60s and 70s and classic ones, you know, Coke and all that. But my favorite is this is a cola nut. So this is a rectangle. There's your rectangle. So after a big sell-off, you need to see a change in momentum. That's all I'm saying. You need to see a halt in the downside momentum. A lot of times it presents itself as a rectangle. Right here, as a rectangle. The key is to buy on the break of the rectangle. That way you know the direction has changed. On the left, what looks like this is on Friday. I spell terrible. I draw terrible. I'm left-handed. There. And if you're left-handed, you probably remember like me when you were in school and you had a pencil and the way you write, you had a ton of lead on your palm of your hand from the way you write. Friday, rectangle. Today, what on earth looks good? I don't see anything. So just keep that in mind in there. So there's a time and a place to play the upside, like when you have a halt of momentum. So just keep that in mind. We don't have that right now. We'll have it later. You don't have it now. So now let's go back to American Express. Number one, on a daily chart, if you want to buy something, there's your rectangle. It's in an uptrend and you're looking for that defined pattern. So let's go to that day. That's November. That's the election, ironically. But at least you had a rectangle. So let's go in it and I'll show you. So we're going to go to American Express. And we're going to go back here, November 5th. And like I said, the tighter the pattern, the tighter the stop. That was the problem with the SPY on Friday. You have to buy on the way up. But even if you did, see the bear flag? That's a bear flag. See it? Prior sell-off, consolidation. But let's go back to Friday. You're going to see that if you do buy here, because it's a loose pattern, you know, your stock's going to be sort of wide. So now, if you wanted to play this rectangle, that's a tight pattern. So if I take these off, I'll show you another rectangle. This is from Friday. Now that's the SPY. The ES had similar. The tighter the pattern, the tighter the stop. That's a rectangle. If you bought right here, 568.10, right here. How do you know when you're wrong? You're probably wrong if it gets under that rectangle. You're risking 50 cents to make $8. So just keep that in mind. Now we're going to go back to November 5th, and I'll show you. Go back to November 5th. So we're going to go to November 5th. Forget about the election. I just want to show you consolidation patterns. That's a consolidation. Right there. See that consolidation? I bet it came out on an hourly as well. Takes a minute to buffer. But the key is when you see that tight, see that? There's your rectangle. Look at that. Now that's a loose one. So all things equal, you buy on the break, you have a 1-point stop. See the rectangle on the left? That's a wide stop, but at least you see the rectangle. There's a rectangle on the downside. You could call that a bear flag. So a bear flag isn't necessarily a slope like that. In fact, when you do a Brecher ledge, it's actually a rectangle because the bottom is horizontal. So it could be like that. It could, but that's what you're looking for on a Brecher ledge. So this is more a Brecher ledge. Let's go to that date. So these are rectangles. I'm showing you bullish and bearish rectangles. 6-5. There's your rectangle, or let's say Brecher ledge. Sell off, consolidation. That's a rectangle because you can draw it like a rectangle, two horizontal lines. Respect the break in either direction. Well, what happened the next day? There you go. It broke down. Now, the problem with a Brecher ledge, everybody thinks, there are a lot of Brecher ledges, which is a bear flag with a horizontal line. The problem is you have to look where support is and be a little logical about it. If there's support right here, that's your first objective, right here. Those prior tops and the prior bottom. Well, let's see where it went. Wow, right to it. That's a miracle. So that gets you into how to structure a trade. Because that's not that big a move, you'd be doing a put fly under the market or a put debit spread. You can't just buy a put because that's not that big a move. But that's the kind of things we talk about with rectangles. So just want to let you know that. That's what we're looking at for rectangles. So like I said, if you're in the central room, what on earth in here looks good? If you have a hedge fund manager, significant other, just fellow trader, breathing down your neck, saying, why are you doing a trade? What would you tell them? Why would you buy here? So is it because other indexes are going up? Well, the Russell now is where it was here. That's like this here. So you can't say correlated indexes are positively diverging. That's number one. Number two, yeah, you're at support, but do you have more reasons than that? No. No, terrible to do in the money credit spreads. Absolutely terrible. Because then you're just betting. You do out of the money to take advantage of premium decay. That way, if you're wrong, you could still make money. You're just betting on direction. If you see a defined bull or bear flag, sure. But just keep in mind that if you do an in the money credit spread, like an SPX 60 580 put spread, there. All you're doing is buying a 560 580 call spread. Do you want to buy a call spread that's 30 points out of the money with 3 hours to go? That's all you're doing. So you're buying a 20 point for $3. So sure, you could do that, but you better have the direction known. So risk reward, sure, it's better. Probability stinks. It's all about probability in this game. I want to be the house. So just keep that in mind. Now, that being said, I still think this. If you did a out of the money put spread on Friday when the SPX was forming a rectangle, fine. Then an out of the money. But the problem is on Friday, you didn't know if it was going to break up, but at least the momentum had stopped. So if it just futzes around, you'd make money on an out of the money put credit spread. If it rolled over, you'd have more than enough time to get out. But if you do an in the money put credit spread and you're wrong, you're going to get destroyed. So I just think it's a terrible risk reward unless you have 3 reasons. If you have 3 reasons, go for it. But getting back to it in here, right now, is there anything in the markets on a short-term basis that are telling you the market's going to turn? I don't see it. Is there anything on Friday? Yeah, you got some reversal candles and you got a defined rectangle. You got a defined rectangle right here. You can call it an inverse head and shoulders. You can call it a rectangle. But after a defined trend down move, you need to have the momentum halted, and then you buy on the breakout. So, like I said, when I was on the floor, you sell out of the money spreads. Unless there's some defined thing. See right here? Heck no, do you sell it in the money spread? Put spread. Heck no, it's a bear flag. So if you want to sell an out of the money put spread, I don't get it. If you want to sell an out of the money call spread, sure, but what happens if it does that first? Sure seems like selling the 700, 5710 was a lot better idea because it has to go up 60 just to start losing money. That's how you make money in the long run. Not having a hunch. It's about percentages. And that's why I like rectangles. So where else in here are there any rectangles today? Up or down? Let's see. And a rectangle, don't make it harder than it has to be. Just look for the rectangle. Now, keep in mind, the overall markets are still in a big old downtrend, but hell, sure, that could be a little rectangle right here. But there's a big difference between this one and the ones on Friday. This one still has a lot of resistance right there. Where on Friday, you didn't have a lot of resistance on the way up. So keep that in mind. So let's go over and I'll show you. Let's go over all the charts. Number one, like I said, if the Russell isn't bouncing and the Russell is where it was in August, July, then the ES is going to have a tough time having a massive rally. Maybe it'll have a little one. SPX could be an inverse head and shoulders right here. Could be. But I'm just telling you, I like using time to my advantage. All right, look at all these. Do any of these look like rectangles on the upside? I don't see it. Maybe Costco. There you go. Maybe right there. Maybe right there. Teeny weeny one. But you also have to combine overall market perspective. And at the moment, market just doesn't look that good. You know, I'd love for it to look good for everyone. So Costco, sure. Now, let me give you a couple of things that I think are hints. Number one, if you're going to take a Lamb Research or a Costco, with the markets going down, what has acted better? I mean, literally, what has acted like it has some relative strength? Capital One, Costco. Does this? No. Does this? No. So number one, this didn't make a new low when the S&P made a new low. Number two, it could be a little rectangle. But my favorite rectangles are when there's no resistance overhead if I'm playing bullish rectangles. So like a lot of you identified for me, how about Northrop? Big old bull market. Did this have rectangles on the way up or bull flags for that matter? Let's look. So here's Northrop on the left on a daily chart. We know what it looks like. Hourly. Did it have a rectangle? It sure as heck did. Look at that. Rectangle. The problem is everybody that I know buys on the way down instead of buying the rectangle break on the way up. I don't get it. In the long run, you're not going to make money that way. You might get lucky. You want to buy on the way up. So how about on a 5-minute chart? Out rectangle. There's a bull flag too, but rectangle. And this had a rectangle within a rectangle. There. So if this breaks, that's going to break. So you got a bullish within a bullish. Just keep that in mind. Those things can make you a lot of money. Now, I know it back tested for you. You might say, well, how'd you know to stay in? You didn't. On the other hand, a rectangle is a measuring pattern. How much was that? So let's just drill down. I'll show you. And these aren't perfect. Keep that in mind, but they work pretty well. Right here to here. 4 points. So from here to here. 4 points. Yeah, that would have been where you take your profit. 4 points, 4 points. Why else would you take the profit? Well, why did it stop right here? Go backwards. Go backwards and see where the resistance is. Well, there you go. Look at that. Prior tops become resistance. Look at that. That area, that whole area. So if you bought, you better be, have your finger on the trigger to take a 4-point profit. Resistance. Yeah, I'm telling you, those rectangles work. So here's another one. There's a rectangle for it. I know they're tops and all that. Totally understand that. But I want you to realize that the more times you could connect the lines, the more important. So when this broke, where was the support? There wasn't any till here. Now, you might say that's not a perfect rectangle. You're darn right. But on the other hand, those horizontal lines that you could draw, and you had a lot of them, it worked great. So I never do in the money credit spreads, ever. Zero. I'm trying to take advantage of direction and decay. So I never buy in the money. If I want to buy an in the money debit spread to bet on it going up, sure, you could do that. So sure, you could do something like that. And the same with on direction. Yeah, you could do that, which is an in the money credit spread, sure. But you better have the direction right. Right here, yeah, you could have sold a put spread, but why not buy a call spread? It's the same thing. I don't know why everybody does it like that. I think they make it harder than it has to be. It's the same exact thing. So, and the better way to do it, if it's still like at resistance, is you do it as a call fly if you're bullish, if there's a lot of resistance overhead. Or a broken wing. Mar of the storm, trying to take advantage of time premium decay. So just keep that in mind. But like I said, if you're going to do a 0 DTE, I'm telling you right now, If you go through all the sites on Twitter, I think you'll see our track record. What's it do? You make money, you lose a little. You make money, lose a little. How many on Twitter do that? Most of them make money and then get blown out. So just keep that in mind. Just go and look on Twitter. They don't show those, of course. And like I said, I never do the opening because you don't know the direction yet. Just keep that in mind. I never do them on the opening because the direction isn't known yet. We've already seen that on a lot of things. So once, if the expected move is 60, but the direction is all over the place, I'd rather do a spread when the expected move is 40, but the direction is known. So I just can't stress that enough. We've seen it over and over and over on our site. The only losses we've had are getting in too early because the direction isn't known yet. Like today, if you did something on the opening when the ES was down 60 and you just do it because of the expected move, well, it's already moved more than the expected move. Rectangle. There you go. Rectangle. I love those rectangles. So, and I've done what, 50 different videos on how to determine direction. That's why I have Chart Patterns Mastery Room. This is one of the ways. That's exactly what I'm showing you. That's pretty obvious of which way it's going to go. So, like I said, I've done a tremendous amount of things on determining direction. Whether it's watching the Bitcoin versus the Russell, whether it's Apple versus the NASDAQ versus the ES, there are a lot of ways to do it. There's a lot of essentials videos on that as well. So just keep that in mind. What do you see today? Well, how do I discern direction? That sure looks like a bear flag to me. And I don't know if they're available or not. I talk about it a lot in the central room. And like I said, there's no holy grail. And the point is that if you see this kind of sloppy movement, you don't know the direction. We wait for the tells. If we don't have the tell, a lot of times we don't even trade. We don't even trade. But there's a bear flag for you. So if you want to buy on the way down, like a lot of sites, that's up to you. But we try to discern direction. You might say, well, isn't that a bull flag? Not against resistance in a downtrend. You respect the break in either direction. So keep that in mind, everybody. Thanks for listening. Talk to you later.